Thomas Russo is an American investor managing over $9 billion. So today we are going to see what companies he owns, what are the changes he made to his portfolio in the recent quarter, and we will go through the history of some of his biggest investments. All of that put together will hopefully help us to understand his investment philosophy. And thanks to that, we can become better investors. The first time Thomas Russo really caught my attention was when I heard him on the Value Investing with Legends podcast, which is, by the way, a great podcast, and I encourage you all to listen to it. It struck me that this man really knows a lot about consumer brands and high-quality companies, but also that he has a long-term focus, which I believe leads to superior returns for us as investors. And he's not concentrated as much as some other great investors that we analyzed on this channel. He owns 83 different stocks. And of course, we are not going to go through all of them, but we are going to look at the history of all the investments that make up over 5% of his portfolio. And they are Berkshire Hathaway, Nestle, MasterCard, Richemont, Alphabet, Philip Morris, Heineken, Pernod Ricard. Other companies make up almost 24.4% of the portfolio, and some of them are also worth mentioning. He owns shares of Netflix, Unilever, JP Morgan Chase, Comcast, and Visa. So let's start with Pernod Ricard. It is the world's second largest wine and spirit seller with 240 brands available in over 160 countries. Some of those brands are Absolut, Ballantine's, Chivas Regal, Havana Club, Olmeca, Martell, and many more. Thomas Russo bought it in Q1 2011 for around $93, and he was adding to this position until Q2 2016, when the price began to go up to around $110, $120. We can see that he was selling it slowly, and the higher the price, the more he sold. So right now he owns around the same amount of shares he had in the beginning of 2011, but he most probably got his money back already. And one thing that is really interesting is how patient he is. He was waiting for over 5 years for the price to rise enough for him to actually start selling. And he was selling through another 6 years. So he's taking his time. It's a long-term process to actually make an investment work. Now let's take a look at Heineken Holding. It is a Dutch multinational brewing company. Heineken owns over 165 breweries in more than 70 countries. It is the #1 brewer in Europe and one of the largest brewers by volume in the world. Apart from owning Heineken, it owns such brands as Amstel, Sol, Birra Moretti, Krušovice, Desperados, and many more. Russo bought this stock also in Q1 2011, just like he did with Pernod Ricard. He bought it for around $48, and he was adding to this position till 2017, when the price was around $100. That was the point when he started to sell some of the shares. He probably got his money back and still has a lot of shares, and it seems that he is waiting for the price to go up again to a level that he feels comfortable selling. Next up is Philip Morris. It is an American multinational tobacco company with products sold in over 180 countries. Some of the brands are Marlboro, L&M, or Chesterfield. And I made a video about this company some time ago, so you can find the link in the description. Unfortunately, we don't know when exactly Thomas Russo bought his first shares of Philip Morris, because we have data only from Q4 2008. But we can assume he bought the shares at the IPO of the company, which was just a few quarters earlier. Or maybe he had shares of Altria and he got his first shares of Philip Morris because of the spin-off from Altria. What we do know is that he bought them for around $50 or $40. But what is interesting is that he was selling mainly when the price was around $70 or $80. So he was making a gain, but not a huge one. And he's still selling the stock right now. Of course, the price is a bit higher, so he gets better returns, but it seems that after waiting almost 10 years, he decided that it's time to get whatever gains he can. Now, with this stock, we of course have to remember that they pay out a great dividend. So he got a lot of his money back through dividends as well. Next up is Alphabet. It is of course Google's parent company. And Thomas Russo owns mainly Class C shares, but he also has Class A shares, which give its shareholders voting rights. But it is a very small amount of shares for him, so it does not change the history of this investment. With Alphabet, the story is a little bit different. Unfortunately, we don't know the exact date he purchased his first shares because we just don't have all the data, but we know that he bought them for around $30. And it was a fairly small investment till Q2 2018, when the price was around $50. And then he started to buy a lot of shares. And what is really interesting is that he began to invest a lot of money into Google just over a year before the price really went up substantially. So his timing was spot on. Then he started to sell and he got a lot of his money back. Now that the price is back to around $90, he's buying again. So clearly he believes that Alphabet at the current price is undervalued. Now let's take a look at Compagnie Financière Richemont. Sorry for my pronunciation, I'm really trying, but they are commonly known as Richemont. And it is a Swiss-based luxury goods holding company. Richemont produces and sells jewelry, watches, leather goods, pens and clothing. Its brands include Cartier, Chloé, Dunhill, Montblanc and many more. This is yet another company that Russo bought in Q1 2011. Now, the reason for all the buys at that time is that he most probably got new investors, or he sold something really big that he owned outside the US. Because the value of his portfolio went up from 2.6 billion to $5 billion. He bought his first shares of Richemont for under $60, and he was adding slowly to this position for next 5 years. And then the price went down, and he added even more money into this investment. In the next few years, the price did go up just a little bit, and he was basically holding this position or selling just little pieces of it. But then, in 2019, he started to sell more shares for a price of around $80. So he didn't lose money on this investment, that's for sure, but it seems that after almost 10 years, he had enough. And most probably that was one of his mistakes. Because as we can see, just few quarters later, the price went substantially up to around $140. So he is still selling this stock right now with a bigger profit, and of course we have to remember that all through the years he was getting a really nice dividend. Now let's take a look at his third biggest investment, MasterCard. It is the second largest payment processing corporation worldwide. I also made a video analyzing this company, so you can find the link in the description. Unfortunately, we have data only from Q4 2008, so we don't know when he bought his first shares of MasterCard. But what we do know is that in 2010, he really made this investment a big part of his portfolio, and he bought the shares for around $20. And he was still adding to this position until the price got to around $70. He made just small corrections for another few years, and then, when the price was closer to $150, he started to really sell this stock. When it was around 350, he accelerated that process, and right now he's still selling MasterCard, and he made a huge profit with this investment. But as with all the other investments that we looked at, this is a long-term process that began almost 20 years ago. His second biggest investment is Nestle. It is a Swiss multinational food and drink processing conglomerate. It is the largest publicly held food company in the world. And some of its brands are Nespresso, Nescafe, KitKat, Smarties, Nesquik or Vittel. And that's yet another one of his 2011 investments after he got extra cash into his fund. He bought his first shares of Nestle for around $58. And he was adding to this position and then holding it until it got to around $80 or $90. And then he started to sell. And as we can see, the price went over $100 and he's still selling and making another nice profit on this investment. And now it's time for his biggest position, and that is Berkshire Hathaway. It is, of course, an American multinational conglomerate holding company headquartered in Omaha, run by no other but the Oracle of Omaha, Warren Edward Buffett. Now, Thomas Russo owns both Class A and Class B shares of Berkshire Hathaway. So I used a 1,500 to 1 conversion rate because 1,500 Class B shares are worth around the same as one Class A share. And that way we got a clear view of the changes that Russo made with this position. So unfortunately, we don't know when he bought his first shares, but it is clearly another long-term investment. What is interesting is a visible trend of selling shares of Berkshire for the last 5 or 6 years. And this process accelerates as the price gets higher. So what are the main lessons we can get from this analysis? Well, for me, the one thing that really stands out is that he is such a patient investor. He sometimes waits 5 or 6 years until he decides it's time to start selling. He is willing to wait a long time for the market to see the value of those companies. The next point is that he is very well diversified. Not only because he owns a lot of stocks, but mainly because those companies are from various sectors and various geographical regions. And the last thing is that if we look at the companies he invests in, we can see that he likes big global brands and companies that have a strong competitive advantage. The top 8 companies in his portfolio are all well-known household names. So if you want to see the analysis of Guy Spier's portfolio, you can find it here. Or you can check Bill Ackman's portfolio here. Thanks for watching and bye-bye.